Morning, everyone. Thank you very much for joining me. This is the morning market review. My name is Ross, Senior Market Specialist at FXCM. My email address are short FXCM.com. Today is Wednesday, it's the 6th of July, 2022. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments, and then I will bring in the commentaries disclaimer as well. Hey, Rob, good morning. Last ever in the webinar. Thank you, everyone, for joining. Very tough markets. Hey Katie, good morning to you. Thank you very much for joining. Hey Sam. Let's just bring up the market commentaries disclaimer. Morning Anna. And here's our references. I think what we'll do is start off with the CNBC. What I'll do, the CNBC morning note, what I'll do is I'll just put this baseline, the baseline, just so you guys can take a look. The reason it's called baseline, incidentally, is because this black indicator here, that's the baseline from the Ichimoku. So that's what I've. But anyway, let's go through the CNBC article. European markets head for higher open as investors look to reverse negative slide. European stocks are expected to open higher on Wednesday as markets look to reverse the negative slide in the previous trading session. So the DAX, just incidentally, is your chart over here, and you can just see how it, and these are all 4-hour charts, so you can see how it fell yesterday. The higher open anticipated for Europe comes after the Pan-European Stock 600 closed down by 2.1% on Tuesday, as fears of recession grew in the region. The July Sentex Economics Index on Monday showed investor morale across the 19-country Eurozone has plunged to its lowest level since May 2020, pointing towards an inevitable recession, inevitable in quotation marks. On Tuesday, the euro fell to its lowest level in 2 decades as fears of a recession ramped up. So this is the euro over here. With gas prices soaring and Ukraine war showing no signs of abating. US stocks also fell Tuesday after staging a late recovery. So here's the Dow moving there. According to Dow Jones estimates, job growth likely slowed in June with 250,000 non-farm payrolls added, down from 390,000 in May. Economists surveyed expect the unemployment rate to hold at 3.6%. In Europe, Eurozone retail sales data for May is set to be released. On the corporate front, GSK will hold an extraordinary annual general meeting, and BMW will publish its second quarter sales. Morning, Howard. Nice to have you on the webinar. Okay. Yesterday was really, it was a savage day. There was no place to really hide. This is the dollar over here. So the dollar was really rampant yesterday. Euro was coming down, pound was coming down, Aussie was coming down. This is the US dollar Canadian, so that shot up like a rocket. You can see this, and the reason it shot up like a rocket is because oil, this is oil was coming down, gold fell heavily. There was really just no place to hide. It was absolutely savage. I think that we'll just take a quick look at oil here, because I think this is an important story. Oil's been a very difficult chart to assess over the last few weeks. The best that I could come up with was that it's moving sideways until yesterday. So let's just this is WTI oil. Okay, so this, but if we had to go to sort of Brent, it's very similar looking chart, sort of moving sideways now. So we can do the analysis here on Brent. trend. The idea here was we by and large it's moved sideways. However, before yesterday, there was actually hints of strength in the oil market. How so? Well, we just have to put in our peaks and troughs. You had your trough over there. Just want to try to zoom in so we can get a, and perhaps just take the RSI here just to give us more room. Okay, so you had a trough over here. We had a peak over here, and then we had the higher trough over here, and then of course we had the higher peak. And given that there was this pattern of high trough, high peak, the next point to see if the trend continues was to see if this was the higher trough. But it is, and we almost did have a higher trough, by the way, until last week. So last week we had 2 of 3 conditions. We had this over here. This guy had the lowest low in at least 3 candles. Then we had price takeout, this reference high. That was on about Wednesday last week, just as OPEC started meeting, and then Thursday OPEC Plus met up. The plus is obviously including Russia, and then there was a pullback in terms of price. We didn't get the third condition. The third condition, it must close above the reference candle high. We never got that. Without the third condition, you have nothing. Two of the 3 is no good. The third condition is everything. So this higher trough never materialized. But what last week's price action subsequently did, okay, is it changed up the possibilities here as follows. So we can start the relabeling because of last week's price action. So last week's price action, then we can actually put a reference peak over here. We could put in our reference trough over here. And then last week's price action actually now looks like a lower peak, okay? And then this week's price action changes it up completely. Now we've got a lower peak, lower trough. So last week we had the higher trough, higher peak, which is the definition of an uptrend. In a span of a week, we've gone to lower peak, lower trough. Well, that's the definition of downtrend. So the picture here has changed up materially over the last 24 hours, and the stochastic rolling over as well. So now you'll get a similar picture with WTI. So we'll just bring up WTI here. Okay, you've got the rollover, and then if you put your peaks and troughs, okay, so we can put in our peak over here. We can put in our trough over here. Okay, then you can see here's your lower peak. Okay, we can get rid of this thing because it's no longer a reference candle, and then we can put this down over here, lower trough. So now the oil chart over 24 hours has changed up considerably, and how we deal with it, I think, has complexities, because one would, trying to put this in, one may suggest that perhaps the forces of supply and demand seem to be realigning, but I think that would be perhaps an optimistic way of looking at it. I think what we have to do is perhaps think of it in terms of how the stagflation plays out. So let's just bring out our Microsoft Paint, and I think this is what's going on. Again, you know, we're putting a very complex situation into a very basic macroeconomic model, okay, which would be aggregate demand, aggregate supply. All right, and the way that we'll take a look at this is the supply shock shifts aggregate supply up. So this is the war in Ukraine. This is the lockdowns in China. This is the supply chain. I guess the fact that these supply chains have come under pressure, but effectively that's what the supply shock's doing. Okay, and that's what effectively pushed the price of oil up. Okay, the correction's not taking place on the supply side. That's now the issue. The issue is that the correction is taking place on the demand side. So if you listen to the news, you'll hear a popular sort of phrase that's been tossed around now in the news is demand destruction. So this would be demand destruction. Okay, so the anticipation of demand destruction, where now the new intersection is, so we get the lower price. We get the lower price. Of course, we get the lower quantities, but this demand destruction is not a good thing, because it's pervading through the system. That's what we're talking about, hard landings. This demand destruction is symptomatic of a hard landing. So the job numbers now become very interesting. Remember, we want to keep an eye on initial claims. We wanted to keep an eye on continuing claims, but the fact that there is really little place to hide in the markets. Let's just bring up the baseline again, because we're going to switch over to the crypto minute in a moment. We'll carry on the discussion there. But the idea here is everybody's piling into the dollar, okay, as a safe haven. At this stage, everybody's thinking cash is king, piling into the dollar. Dollar is looking quite top heavy, incidentally. We'll look at this on the Bitcoin side. The Bitcoin, but we're going to switch over in a moment. But I just thought that the oil chart is definitely important for us now to keep an eye on. We're going to continue this discussion in the Bitcoin webinar, because I think it flows over to Bitcoin. Just Katie suggesting that there could be a double top here. And that would be really interesting, I think, Katie. So obviously, here's the neckline for the double top. And of course, the breakdown here may in fact be that topping pattern. What we can say, Katie, so if we get the stochastic heading towards that 20, okay, so there's that F, right? So I don't know if it's going to hit 20, but if it hits, then I think this, you know, the double top neckline breaks, and then that would be very interesting. But regardless of that, peak and troughs right now do have that lower peak, lower trough. The one thing we can say about the lower peak, lower trough is that it's very disorderly at the moment. What I mean by disorderly, well, kind of this would be a more ordered kind of. If you take this as a trough, this is a peak, this is a higher trough, this is a higher peak. It's much more spread out. It's much more spaced out. This kind of is all very compact. Over a matter of 4 weeks, we've got lower peak, lower trough. I'm not quite sure, sort of in the grand sort of scheme of oil market movements, what that particularly means. there's two possibilities here. So I apologize because they're hedging one another, one way or the other. Either the fact that they're so compact means that there is going to be a drop below that drop below that neckline. We do head into that doing, or being so compact, being so disorderly, perhaps the volatility here hasn't quite sorted itself out, and the downtrend is perhaps not the most sort of perfect downtrend that we can be confident of. So I'm not quite sure what to make of it at the moment. I think that the way to look at it is probably to respect the demand destruction. We're going to look at the inverted yield curve in the next webinar as well. And I think because of that inversion, perhaps this slower peak lower trough is quite meaningful in that context. Let's conclude at this point. Please join me for the next webinar. We're going to go straight into it, which is going to be our crypto minute. Thanks very much, guys, and I'll see you in the next few moments.